Bloomberg Audio Studios.
Podcasts, radio, news.
I'm Stephen Carroll, and this is Here's Why, where we take one news story and explain it in just a few minutes with our experts here at Bloomberg. It's been a popular trading strategy for many years, borrowing in one currency to invest in another, at least until recently.
And the yen rally intensifies as carry trades unwind. JGBs fall the most since 1999 as the Topix enters a bear market territory.
This is the worst day since 1987 for Japanese equities. What is happening and driving these extreme moves in the market, the unwinding of the carry trade?
I'll tell you, we talk about China exporting deflation to the rest of the world, Tom. In this case, Japan is exporting inflation to the rest of the world.
The Japan story, the carry trade, is actually what's causing a little bit of chaos in the markets. And I think that, there really has been an immediate reaction to that.
The carry trade was a key part of the market turmoil we saw in early August, which included big moves on currency, equity and bond markets over a number of days. Since then, lots of questions are being asked about the future of the strategy. So here's why the carry trade will carry on. Our managing editor for foreign exchange and rates, Rachel Evans, is with us for more. Rachel, first of all, can you explain what exactly the carry trade is?
Yeah, it's one of these terms that we tend to throw about willy-nilly without really defining it particularly well. But basically, it's pretty simple. It's just borrowing something at a low cost or low rate in one country to invest in something with a higher yield somewhere else. So, for example, in this case, we've been talking a lot about kind of borrowing in the yen, which obviously is at kind of very, very low levels right now, and investing it in places like Mexico, where bonds are yielding a really chunky, nice yield, or in US tech stocks, where obviously we've seen stocks like Nvidia going on a real tear. So it's really just that kind of, looking for cheap money to invest in something that's going to pay you back in a bigger way.
So what exactly happened to this trade then during the market turmoil we saw at the start of August?
We'd seen a few wobbles in this trade for kind of prior weeks. US tech stocks having days where they'd sold off, for example. And we had been sort of talking a lot about kind of how stretched positioning had become in the yen, with just everybody seeming to expect the yen to stay weak for a longer period of time. And then in a very short amount of time, we had a few events that really rocked that expectation. We saw the Fed holding rates, but signalling that it would start to cut in September. We saw the Bank of Japan raising interest rates, and this was the second hike that they'd done. And then we also saw jobs data coming and suggesting that the US economy was weaker than previously anticipated. So all of that kind of put together, the idea that the Bank of Japan wasn't just going to keep rates really, really low indefinitely, that they were going to start increasing those and kind of be on a path towards higher rates, and the fact that the US economy perhaps was wobbling and the Fed may be behind the curve. Those sort of sentiments really kind of combined to prompt everybody to take a really sharp look at some of the trades that they've been considering as no-brainers for the year and really start unwinding those at breakneck speed.
Have we seen this sort of thing happen before, where such a popular trading strategy in the carry trade has essentially become very unpopular very quickly?
I mean, the carry trade is particularly prone to these rapid unwinds because it does rely on stability. It relies on a lack of volatility for it to really kind of work and pay off. So back in 1998, we saw a pretty sharp reversal. We saw the yen then rise 16% in 1 week, which is, puts things in perspective. Yeah, exactly. I think we saw a 3% rise on Monday when things were at their worst here. But then again, we saw this in 2007 when we were dealing with the ripple effects of the subprime mortgage crisis. So when we do see kind of some of these exogenous events like geopolitical turmoil come in and sort of boost currency like the yen, which has tended to be favoured by carry traders to fund these positions, that can really disrupt this trade. And so this is not the first time it's kind of happened.
What about the carry trade using currencies other than the yen? Have they seen the same sort of effect that we've seen with the yen trade?
Yeah, similar. I mean, the yen has very much been kind of the dominant currency for obvious reasons. It's very, very liquid. It's easy to get in and out. And there has been this kind of very long narrative of low rates in Japan. But we have also seen people using the Chinese yuan to fund carry trades as well. So when we were seeing kind of the height of the gyrations last week, we did see the yuan also strengthening alongside the yen. And that's been a bit of a pattern. You know, when we have seen kind of the yen having days of strength, it's tended to kind of come alongside some yuan strength too, with a sense that kind of like this unwind of carry is really fueling both positions.
Does this mean the carry trade has lost its shine? Is this a fundamental change?
It certainly lost its shine for now. But like everything, you know, nothing really goes out of style for very long. And in fact, I was just looking at some of the gauges of carry on the Bloomberg terminal and noticed that there's a gauge of dollar-funded carry trades in emerging markets that's up 2% since last week. So clearly, you know, if you got in at the bottom when everybody was really sort of heading for the sidelines, you could have actually made a pretty nice profit. So these things sort of tend to kind of come around. But it does feel like we're getting a bit of a rethink of exactly how invested in this trade you really want to be. How far do you want to kind of sort of blow out your profit margin betting on this one strategy? And do you want to diversify perhaps a little bit beyond just using the yen to kind of fund these carry trades?
So what sort of event could reinvigorate this trade? And can I take a guess? And is it central banks?
Central banks are always crucial to this, yes.
Actually the answer to everything when it comes to
pretty much in macro land. I think there are two things that kind of have the potential to reinvigorate the trade. The first would be a boring answer: stability. Everybody in this trade needs stability. They need a sense that they know what's going to happen and a sense of certainty. Now, the Bank of Japan is keeping rates very low for quite a long time, it would seem. Like, we're not talking about huge interest rate increases. We're at like 0.25% now. Like, this is not particularly dramatic given where we are in the US or in the UK in terms of where interest rates are. So once people get a sense of kind of certainty that they're not going to suddenly, you know, hike rates to 1%, 2% or higher, then I think you could see some sort of re-establishment of these bets, given that the thesis of borrowing low and investing in higher yielding currencies still really holds. You just need to be prepared that you're not going to get quite as much for that. The other possible reinvigoration would be if we see something idiosyncratic happen, where we see interest rates in one country cut and much lower than elsewhere. It's very hard to predict what would cause that. It would be some sort of local political drama, local economic drama that would see interest rates somewhere become much lower than the rest of the world. But we'll have to see exactly where and when that might happen.
Thank you, Rachel Evans, our managing editor for foreign exchange and rates. For more explanations like this one from our team of 2,700 journalists and analysts around the world, search for Quick Take on the Bloomberg website or Bloomberg Business app. I'm Stephen Carroll. This is Here's Why. I'll be back next week with more. Thanks for listening.